And having seen silver just currently in this 1 year gone from 22 to say 32 or 35, and if you look forward and at a point in time where, let's say 6 months, 12 months, even 18 months in the future, where these supplies would come from private stockpiles to the market, silver maybe, who knows, at $40, $45, $50. Is that enough? I'm not convinced that those prices are enough to really satiate this excess demand. And this excess demand is also not going away. You just have to look at what's going on with industrial demand. It's just going through the roof.
The silver market has captured significant attention as prices have demonstrated remarkable strength, surging from $22 to $32 range within a year. This impressive rally has prompted market experts to reassess their price targets and market outlook, with many suggesting this could be just the beginning of a more substantial move higher. PeterKrauth, a renowned resource sector expert and author specializing in precious metals, has raised compelling questions about the adequacy of even higher price levels. Krauth suggests that $40, $45, or $50 per ounce might not be sufficient to balance the market's current supply-demand dynamics. Adding weight to the bullish narrative, analysts at InvestingHaven have presented an even more optimistic outlook for silver's price trajectory. Their comprehensive research suggests that silver could reach several significant milestones in the coming years, with a particular focus on 2025 as a pivotal year. Their analysis points to silver testing its all-time highs during this period, with a specific price target of $50 per ounce. Strong market dynamics reinforce the bullish outlook for silver, as PeterKrauth highlights the ongoing supply-demand imbalance. Silver demand has outpaced supply for the past 3 years, with 2024 projected to see a 20% supply shortfall. This persistent deficit, coupled with rising industrial demand, particularly in solar energy and electronics, creates significant pressure on supply. Additionally, increased investment demand, driven by silver's appeal as a safe haven asset during economic uncertainty, further supports the case for potential price increases. As these demand pressures show no signs of easing, Krauth suggests that the supply constraints could continue to push silver prices higher. Before we dive deep into this video, make sure to subscribe to our channel and hit the bell icon so you don't miss any updates.
We've had a few silver squeezes in the past. They take different forms, but I do believe that we're heading towards another one. And, even some conservative groups like the Silver Institute and Metals Focus that does their research for them have said recently, actually very recently, they feel that, so two interesting things. They said that these deficits will only continue to be met from secondary above ground supplies over the next few years. So mining will not react sufficiently to help meet any of this excess demand. And they also feel that the deficits will reach new records over the next few years. So this is not going away. Basically, what they're confirming to us is this is not going away. And there was some research from S&P Global Intelligence that looked at mine supply. And they basically, so again, a little bit of context for viewers. About only 25% of mined silver comes from what we call primary silver mines, a mine where the main product is silver. 75% of mined silver comes as a byproduct of mining other metals, copper, gold, lead, and zinc, mostly. And so S&P Global Intelligence has put out forecasts saying that silver from primary silver mines is going to peak in 2 years, in 2026. They see that supply falling. And if you look at the forecasts from the Silver Institute for mine supply, not only, has it been basically roughly 1 billion ounces for the last 10 years, they don't see it growing at all for the next several years, certainly not this year. They actually see it falling in 2024. So this just sounds crazy if you think about it. Demand is 20% above supply. Recycling is very unlikely to be able to react in a significant way. Anyways, it's only about 15% of supply. Mining is 85% of supply, and mining is not moving. It's actually falling slightly. So these deficits are here to stay, and there's really only one way, realistic way that I could see over the next few years that these deficits could really actually be met, and that would be from what we talked about earlier, these difficult or impossible to assess privately owned, hoards of silver. And so, however, my argument about that, and some people will say, well, at the right price, this will come to market. And I won't argue with that, but I will say that I don't know, and nobody knows, I think, at what price. So what price will it take for people to let go, sell some of this silver back into the market, given the kind of economic environment, inflationary environment that we are in, and having seen silver just currently in this 1 year gone from 22 to say 32 or 35. And if you look forward and at a point in time where, let's say 6 months, 12 months, even 18 months in the future, where these supplies would come from private stockpiles to the market, silver maybe, who knows, at $40, $45, $50. Is that enough? I'm not convinced that those prices are enough to really satiate this excess demand. And this excess demand is also not going away. You just have to look at what's going on with industrial demand. It's just going through the roof.
In 2016, gold and silver experienced significant price surges, with the silver market particularly seeing remarkable gains. PeterKrauth, a renowned precious metals expert, reflects on the events of that year, noting that silver rose by about 40% from late January to midsummer. The rally in silver during 2016 was fueled not just by price speculation, but also by a significant increase in global demand. According to leading market analysts Thomson Reuters GFMS, global silver demand hit an all-time high that year, driven by robust investment demand in ETFs and stockpiling in trading exchange-approved warehouses. Total global silver demand in 2016 exceeded 37,000 tons, marking a 2.8% rise from the previous year, as reported by Adrian Ash at Bullion Vault. Despite this surge in demand, mine supply struggled to keep pace. Silver mine production dropped by 0.7% compared to the previous year. This created a significant supply gap of over 9,500 tons, which contributed to the tightness in the market and further supported rising prices. Krauth also points out that during the first half of 2016, this ETF saw an extraordinary rise, increasing by about 8 times the percentage silver rose within 6 months. Let's get back to the interview.
The juniors, what's interesting is you look at what happened in 2016, for example. There was an absolute spurt in the gold and silver prices. We saw silver take off. I think it was something like 40% that year from late January or so until maybe July or August. And if memory serves me right, silver was up about 40%, which is quite impressive. But you had the silver juniors absolutely explode higher. And that's in the silver. And that's really actually using this SILJ ETF, which is traded in the US. And some may argue, I think fairly, that it's not a true silver juniors ETF because, again, market caps are small in this space. And when you build an ETF, you can't easily go into these sort of more thinly traded companies. So they build their index in a way that allows them to, invest in these companies. But it's also a little bit misleading because many of them are silver or gold producers that have interesting or significant amounts of silver. And then, as I say, it's called silver juniors, but really they're pretty sizable market caps. Nonetheless, that ETF absolutely took off when silver did in the first half of 2016. And if memory serves me right, that ETF of so-called silver junior was up about 8 times what silver was. absolutely phenomenal. I think that if you look at how that ratio chart has been evolving, it's bottomed in the last sort of year or so, and I could see a similar move start to happen. And it really, the kind of move we've had in silver itself, where silver bottomed at around $22 in February, we're currently close to $35. Silver has easily outpaced gold this year in a big way, and there's no reason why we're not going to see the see the equities really start to gear up, so to speak, and really start to catch up and could perform really quite dramatically. But, silver has been trading in this range, and we've been hearing from the Silver Institute and others who do research about the limited supply, and then the growing and excess demand. And so I think it's good to give viewers some very simple, straightforward context. Silver is about a billion ounce a year market. In other words, supply. So you have about 85% of that comes from mining, and roughly 15% comes from recycling. However, demand is a $1.2 billion market. So there's a shortfall of 200 million ounces a year. This is 20%. And this is consistently for the last, I'm going to say 4 years, if you include the forecast for this year, which if you include this year, we're at something like 740 million ounces of deficit, cumulative deficits for the last 4 years. That's 3/4 of a full year's mine and recycling supply just in the last 4 years. So, if I look back to around January or February of this year, I was thinking, I had subscribers asking me, if there's these ongoing deficits, why is silver not pushing above sort of this ceiling of about $32 roughly? And so I said, you're right, I need to look and figure out what is likely weighing on the silver price if there's just this excess demand.
As silver and gold continue their upward momentum, the imbalance between supply and demand remains a key driver of market potential. With silver demand rising significantly, particularly in industrial sectors, and mine supply unable to keep pace, both metals are positioned for further gains. This environment creates a strong backdrop for junior mining stocks, which have historically shown the potential to outperform during rising prices. Where do you think silver prices are headed next, and will junior miners outperform again? Let us know in the comments. If you found this video helpful, don't forget to like, share, and subscribe for more insights on silver and gold markets. Hit the bell icon so you never miss an update. Thanks for watching.